Hi traders, you're welcome to my channel. I am OT Josh. In this video, I want to be trading on based on the information of candlestick wicks. So after this dead doji, I want to start my analysis from here. Now watch this. I'm going to analyze. I'm going to show you what goes on in my head as I trade. This is just a part of how I trade. Okay, you see, look at this candlestick here. We have something like this. We have this green, right? We have something like this. Yes, we have a wick at the bottom. Well, what we have is a wick at the bottom, which is longer than the wick at the top. That is what is most important. Now we have a wick at the bottom, and then we have a wick as well at the top, and the one at the top is longer. Now, how do we read the pressure? How do we can see now that the market is trying to go up? Why? Because of this dead doji. You can see this trend. This dead doji shows that there is neutrality, and this is the first candle. So when we see this candlestick here, the up wick is lower than the bottom wick, which means that sellers tries to push down, buyers won here. The body of the candle is for buyers, which is green, showing momentum, and see sellers. Look at sellers lost. Why? Because you can see when buyers came in, sellers pushed, they couldn't get as much space as buyers got when sellers failed. So we now know for sure that this candlestick is a buyer's candle. Now let's look at the next candle. Okay, look at the next candle. Now in a case like this, you don't trade. I'm going to do a call here, and I'll explain to you why I did a call. In a case like this, you don't trade. Why? Because this next candle is a green candle. Sorry, is a red candle. I was expecting to analyze two candles of the same colors. You understand? Two candles of the same colors, and then I get my result. But now I had a green candle and I had a red candle. So in a case like this, no trading. So now let's go. Let's see how this one closes, which of course I know is going to close definitely 100% above my entry point. Now it's closing above my entry point. I'm going to show you now why I did this trade. This will be a good example. So watch this. Watch this. Okay. You see there is a red candle now here. Now there is a red candle, which is this candle. I'm going to draw it out. Here is it, a red candle, right? Now we have these wicks. They are the same length. They are of the same length. So let me put it here. Same length wick. Now what does this candle tell us? This candle on its own is what? An indecision candle. Why? Because buyers and sellers are of the same. Their activities are of the same. Buyers here, sellers here. Sorry, sellers here, buyers here. The same pressure. Now let's take a look now at the next candle. If you notice the next candle, which is this candle here, what you find out is this, that the candles, the lower wick, which is the pressure from buyer, is more than the pressure from sellers. Let me show you now. You see something like this and this. Okay, this, but then the lower wick is longer than the upper wick. I know I'm not getting this right, but you get the point. Now when you get a candlestick like this, what does it mean? It means that within these two candles, the information I got is that at first the buyers and sellers pressure were equal, but we can see a shift in the pressure whereby buyers are now stronger than sellers. That is for the pressure. The wick, one of the rules of candlestick analysis is that the wick is the first point of focus, because it immediately shows you the impending strength, weakness, or indecision within a candlestick or a price action. Now when I've seen this, now why did I do this call trade? Now I'm looking at the body. Look at the body of this candlestick. Look at the body of this candlestick. What can you deduce from here? You can say that there is a loss in momentum, because the body is not really that important. as the wick, because the body now confirms what we've seen. The body is now showing you that the buyers are stronger than sellers within these two candles, and you can see how the selling, which is the red part, is going down. So why is it now that after this whole thing, the candlestick still closed as red, and I did a call trade and I won? I'm going to show you. I did that. Okay, it closed as green. Okay, I did this because of one simple thing. Look, there was a level here. There was a level here, but apart from this level, within this price action I just traded, this was the level this little price action created within these two candlesticks. I'm drawing the levels within these 2 weeks. Can you see it? So if you look, I waited for the candle to come to that. I didn't just go with a call trade here, because if I go at the end of this candlestick, a loss might happen. Now if you look at these two candlesticks, I did a call trade here. Now look at these two candlesticks. Now you find out that the upper wick and the lower wick is the same thing. The upper wick here is stronger than the lower wick here, which is selling pressure. The next candle, call trade. Why did this candle go down? Look at the round number here. Look at the resistance level that has been formed in the past here. You can see it. Look at the round number here. Now if we want to go by what we've learned in our course, within this little price action, let me see. Okay, within this price action, you can see that this was a markdown, a downtrend, and now this is the beginning of what? An accumulation phase. So therefore, the sellers are being brought inside the market from here. This is why I said you should get this ebook to understand the course and the ebook, to understand the fundamental or the foundation of these movements, the reasons behind these movements. Now you can see it. Now I did this trade here. There are many ways to trade. When you get the foundation carefully, when you understand it, you can use any strategy. I've said this times and times again. If you look at these two candles, what am I doing? I'm analyzing two red candlesticks, and I got this call. I'm analyzing now two green candlesticks, not this and this, because if I go and analyze this and this, you can see that there is increasing momentum and the pressure was neutral here. So if you go with a call trade below the closing price, you can still get in the money. But to be sure, you cannot go with a call trade in a zone where you know sellers are expected to come in. So you are doing two green candlesticks to get your analysis, two red candlesticks to get your analysis. Now we have a red and a green candlestick. The analysis totally will change from here, because we are now in a ranging market. For instance, you can see these two green candles. What is it telling you? No sellers came in from here. Look at these two green candles now. Let's take a look at this candlestick and this candlestick. Why you see that you might get the analysis right, but you get your trade wrong. When you see these two candlesticks, you might want to say, okay, I need to do what? A call trade. But you do the call trade and you lose. Why? Because above here there is a resistance level, which is the round number. So when you do this, when you see this candlestick that is signaling a call trade and there is a round number here, this is the main reason why sometimes you go for 4 minutes expiration. But if you are not going for a 4-minute expiration trade, here is what you will do. When you see a round number here, here is the nearest pressure point. It's here. Can you see? Here. This is it. And another one here. And I'm going to show you why. Now, this is a resistance, a support level, obviously. This is support, right? Broke, formed a resistance. So this is a change of polarity. Now, if you look at these two candles, increasing pressure, the middle of this candle here is also what? A key level. That was why this candlestick had to come down here, right? and then we do a call here. Now this wick here will no longer be selling pressure because of this pressure. This is the pressure from support. This now is showing buying pressure, so you can go with a call here. This is how we do candlestick analysis. Now the analysis for this part of the market is totally different. I cannot say I want to compare the wicks and the shadow or the body of this candlestick to get a future direction. I am going to lose the trade. What I will do now is another analysis totally, because we need two candles of the same colors like this to get the direction of the trend. Now if you look at these two candlesticks, what are we saying? The upper wick here, selling pressure is greater than buying pressure. Oh, I missed that move. The upper wick here is greater than the buying pressure. Sometimes when you miss the move like this, it's good. I would like to trade only when this running candlestick comes here. If it comes back here, I would trade. And I'm going to show you why I said that, because I don't want to do a trade here, because in the past there is a support level. You can see, even though now we know this candlestick is going down, there is a support level that will not let it go down at this time. Take note, at this time. It's not as if in the long term it won't go down. Just like what I explained here, there was a round number here that won't make this good analysis go up at this time. So all I need, like I said, I want this candlestick to come back down here. Okay, let's see. I would like to do a put. Yes, now let's see how this one goes. Now if you understand what I said in this first explanation, so the sellers here are stronger than the buyers. Look at the body. The sellers here are also stronger than the buyers. Now the momentum has increased a lot. Now we have our direction. We now know the market is going down. But when are we going to enter this trade? When is the right time? You see, timing is a very crucial factor in trading, in everything we do. We don't want to do the right thing at the wrong time. You understand? We don't want to do that. So I'm waiting now for this candlestick to come back to this place. If somebody can tell me the reason why I'm using this place, why I put I put this line here before this candlestick went up, in the comment section, please let me know why did I put this line here. If you are really serious, you will know that I put this line here for a specific reason. So I want to hear that in the comment section. I hope you already understand why I did this. One more last time, I'm going to do this explanation for you. Now here is what we had there, which is this. I just had to do it. You can see these two candlesticks. Here is what we had. Now look at this. You can see that the sellers here, the price went up and sellers pulled this candlestick down. So this place now belongs to who? It belongs to sellers. Yes, it belongs to sellers. Yes. Now you can see that this place now belongs to what? To who? Sellers. And the same thing happened with buyers. The candlestick went up, it went down, and buyers pushed. Yes, sellers. And in the same vein, this bottom here belongs to where? Sellers, to buyers here. Now these are for who? Buyers. Now the candlestick momentum is not as strong, so the candlestick momentum is small, or it's just small, a small momentum, right? Now in the next candle, you can see how the momentum from here increased. Can you see that it increased? So in this side we have what? Momentum increases. We have increasing momentum, right? We have increasing momentum. Now the next thing we have is the same buyers and sellers. Sellers here are stronger than buyers. Sellers here buyers here. Oh, sorry, buyers here. Okay. Now, looking at this, if you just take just common sense, you see that we have one buyers, sellers, increasing selling momentum. So within these two candles, we can see selling pressure is obvious. Now we now know that it is selling pressure. We want to trade for binary option. We want a situation whereby a trade will last one day in our favor. What do we do? We wait for the next candle, because if we had traded from here, that's the best thing you should do. But looking at the past, we saw that buyers, looking at this past here, we saw that buyers had come into this place. So we had to wait for where we know sellers will be stronger, because at this place sellers cannot be strong, because this is the strongest point where sellers came in. At this point, sellers may be exhausted. We want to buy, we want to sell at a higher price. Remember, in trading, you sell high, what you buy low. So if we are selling here, we are doing the wrong thing. We are selling low based on these two signals we've seen. So we wait for the candlestick to come back to a good place and then we buy. Now I drew this line and the candlestick came back there. So I'm asking you, why is this line here? I've said this thing over and over again. So please, if you know it, leave it in the comment section. If you haven't got the ebook, please contact me. I'm going to show you how to get the ebook. It's not free though. And then the course. With these two, you are good to go. With these two, you are good to go. So this will be all for today. If this is your first time, please do well to like, share, and subscribe to the channel. And until next time, bye bye.